What's up, traders? Anthony Crudele here, and welcome to 10-Minute Technicals. In today's video, I'm going to go over why I believe the E-mini S&P is now in mean reversion mode. Now, that doesn't mean I'm throwing in the towel in this rally, and I think that the market is just turning bearish. I just think in the short term, the market is going to have a mean reversion move back down, and I'm going to show you through the technicals why I believe that. In today's video, I'm going to be using the E-mini S&P symbol ES1 exclamation point. That's the continuous contract here on TradingView for the E-mini S&P. Now, I use futures to trade the S&P, and if you want to trade futures on TradingView, you can go to tradestation.com/Anthony, and you can open up an account with TradeStation, and then you can connect it directly here to TradingView to trade futures. Now, here on the charts, I have a daily chart. I'm using candlesticks. The red moving average is a 5-day simple moving average. Bollinger Bands are 20-period 3 standard deviation. Around the Bollinger Bands is my beacon indicator, which is just a 70%, 50%, and 30% lines, basically fibs on the Bollinger Band peaks. Then I also have an anchored VWAP to the opening day of the year, which comes in at 52.29. Make sure you have your BADJ, your adjust for contract changes, because we recently rolled over from June to SEP. And that was on June 17th when that became the front month, SEP, which is U. And so that's a symbol for SEP. And then you can do what I did. I actually anchored a VWAP to the first day that SEP became the front month, because I want to see what the market's doing relative to the roll. Because even though June is off the table, it's rolled over, I like to see how the volumes come in on a new contract. Like, even though today's July 1st, it's the first day of a new quarter, really for futures, first day of the new quarter comes in more around June 17th because of rollover. So everyone that's in SEP expiration, it doesn't expire till the end of the quarter now. And so it's a little bit different with your times, but it's just something to keep an eye on. So I'll keep that on throughout the quarter. And I also have an RSI. Now, let's talk about a few basic things. First off, Bollinger Bands, that's the lead for my strategy. Whatever the Bollinger Bands are doing, that's going to give me the number one thing to look at for what I think the market environment is. When you look at the market environment right now, you have Bollinger Bands coming inward. Anytime Bollinger Bands are coming inward, it tells me we're in mean reversion or consolidation, right? Pretty simple. Volatility is contracting. It's not expanding. You'll go back in this area over here where volatility was expanding when the Bollinger Bands were opening up like a mouth. And when it stops expanding, they start to contract. You see consolidation here. And now I think we're in mean reversion. So what I'm going to do is I'm going to take my square and I'm just going to box out the area, which is basically going to be roughly 55.50 down to 54.50. That's my range of execution. So within this range is where I look for the market to potentially, stay below there and go down. Now, mind you, if the market gets a daily close above this area, I think we can start heading back up. But for now, I think we're going to go back down and trade yellow. And I think it's going to look very similar to what we did here. So let me grab my square back in this area. And this is exact similar situation. So if you've watched my 10-minute technical videos in the past, this was an area where I said, look for mean reversion. It went down there, it kissed yellow and came right back off. And I think it's a very similar situation. What's adding to my bearishness in this current moment and why I'm sitting here short right now? I'm using micros for this position, and I'm going to use options. I haven't used options yet. I was waiting to see how the market closed today. So I'll use options on futures as well. But I'm going to use micros because I want to sleep at night. I want to keep a small position. And anytime I'm going against a primary trend, which has been very strong and bullish, why do I want to be in with a full position with E-mini S&Ps? I'll use E-mini S&Ps during the day to day trade it, but I'm not going to keep them overnight. And I'm going to continue to scale in, dripping my position in using micros so I don't have to be price sensitive. Because let's face it, anytime you're fading these powerful upward trends, shorting futures, index futures, it's typically a losing battle. I'll be honest with you. I mean, it's not 2008 or it's not COVID where we're in this, bear market where shorting is the play. It's not. And so I'm going to be very small and very precise with what I want to do. I want to sell rallies, not breaks, right? So we have this anchored VWAP. I have the 5-day moving average, and I have my beacon level, which all come in between 55.37 and basically 55.47, 55.50 we call it. So that area to me is massive resistance. And as long as we stay below it, I think we're going to head lower. Now, additional confirmation I got recently was, look what happened up here in the RSI, right? Volatility was expanding, okay? Market got, it made new highs, started to rotate lower. Bollinger Bands came in, and you started to see the RSI go from overbought back into this range. And most people like to look to sell RSI right as it's getting overbought. I like to wait for it to get below that little moving average. Just let it get back below 70. Let the market start to show me that, look at, okay, it's done. Because I like buying RSI oversold in bull markets pretty soon, pretty quickly. I don't like selling oversold or overbought. I'm sorry. I don't like selling overbought into a bull market because it can stay overbought for months. I mean, look at NVIDIA. You get crushed trying to sell it into that rally. And like I said, shorts is a hard trade in a bull market this strong. And I thought today the market did very well. It's why I didn't get into options yet. I've been waiting to see how the market's going to close. And you got to have consistent closes below 55.47, 55.50 for me. In the short term, I'm just moving overnight. My stop's just above 55.50. I'll give them a little room above there. And as long as intraday, when I wake up in the morning and we're below there, I'll look to be short for a target of 54.50. And I just keep it really simple. 5-day moving average, anchored VWAP from the first day of the new contract from June 17th. Bollinger Bands are coming inward. RSI is overbought, coming back into this range. Market's telling us it's exhausted. And it's not just by one definition, one technical definition. It's by multiple things. And so when I see this, it's forcing my hand to be in this. And, you know, it's just about being small and smart in this. Look, we got 4th of July week. We've got unemployment on Friday. I just look at it like this: small positions overnight. If the market comes in down, great. You know, I'll have a small winner. If I get stopped overnight, no worries. I have a small loser. I'll come back in, watch it during the day. And as long as we stay below 55.50, my target's 54.50. I'm keeping it super simple, super short, not even full 10 minutes in the 10-minute technicals this week. That's my reasoning. You know, I don't complicate things, but one last thing I want you to keep in your mind anytime you're looking at setups like this: you have a swing position, that's your core position, and you have your day trading, right? My day trading is going to be focused on the short side. I can get a little more aggressive. I can get a little bigger with position sizing during the day. Overnight, I'm not going to sit on a big short position in a bull market. That's what they make micros for. That's what they have options for. So you have to differentiate the two, and don't let a swing position turn into a day trade or a day trade into a swing. Have them separated and have a plan for when you go in to execute. That does it for this week's 10-minute technicals. Cheers, everybody. And if I don't hear from any of you or see any of you, which I probably won't because this is a video, I want to wish all my fellow Americans an absolutely wonderful, fantastic 4th of July. And to all the traders out there, they're going to be taking time off. Take time off. Get some rest. I'm sure it's well-deserved. I know all of you work very hard. Cheers, everybody.